Next up, we're going to go to a good old Aussie, an old friend of mine, Darren Gordon. He is the Managing Director for Centaurus Metals, and the ASX code is CTM. Now, some of you may have seen an interview that I did with Rick where we talked purely about nickel. These guys have got, they call it Unleashing Jaguar, which is delivering on a new generation of reliable, low-carbon nickel supply, and it's in Brazil. And one of the things I know about Darren is he spent about 15 years in Brazil. He knows what it takes to get a project up and running, giving shareholder value. And as Rick said, you've got to be a contrarian. And right now, people aren't looking that much at nickel, but if you listen to the interview I did with Rick, he is very, very bullish on the nickel story. So please welcome Darren Gordon.
Thanks, Kerry. Thanks everyone for coming along. Great pleasure to be back here, and welcome to all of those who are on the live stream. As Kerry touched upon, Centaurus is really a nickel story, a nickel sulfide story focused on our Jaguar project in Brazil. We have spent a lot of time in country. We do know what we're doing there, and we do feel like it's a very good time to be talking about nickel again. We've just completed a feasibility study on Jaguar, just got released last week, and so most of the flavour today will really be about the relevant information that's been coming out of that feasibility study. So hopefully at the back end of what we talk about, you'll have a pretty good sense that this is one of the best ways to play nickel, and certainly one of the best ways to play the nickel sulfide space. So if you look at where we are, northern part of Brazil, great place to be building a mine. A number of other mines, the very large ones are Vale, based in the Carajás. Aero Copper have recently completed a copper flotation plant only 40 kilometres from where we are. There's a lot of infrastructure, a lot of people, a lot of reasons to be there. What the feasibility has shown is that we will be low cost, both from a capital and operating cost perspective, and I'll talk in some detail about that. But fundamentally, we have a project now that can do somewhere in the order of 18,500 tonnes of nickel per year. At the moment, it's sitting as an 18-year mine life based on the reserves that we've just defined as part of that feasibility study. I think one of the other key takeaways right now is the difference between price and value, and that's one of the things that Rick touched upon in his opening speech this morning. And that's very clear for us, and I think that is part of the contrarian view that you might have around nickel. The Indonesian supply has definitely impacted nickel price, which has impacted nickel sentiment, particularly nickel stocks in Australia, which have relatively high cost. Centaurus has been able to show through this feasibility study that we will be low cost, but obviously haven't had the reflection of value at this point in time, given we've just put that study out. So if you can, as we go through today, if you can just keep in mind that we're a 220 million market cap company with a project that's now got a post-tax NPV just shy of $1 billion Australian dollars. The market itself is still growing. I think there's probably a little bit of a disconnect between what happens in the equity markets versus what happens with the end user market, the strategic off-takers that we're looking at engaging with to partner into the project. When you look at what's got to still roll out in North America and Europe, nickel chemistry is still going to be a very big part of that. The Indonesians have supplied a lot of material over the last couple of years. It's probably not going away. So the important thing for Centaurus is really to be able to demonstrate that it can compete on cost. And if it can compete on cost, then it's going to have a very strong advantage from an emissions perspective. And our project does have one of the lowest emission points for anywhere in the sector. So those things will become more and more prevalent. Definitely the conversations that we're having with potential strategic partners has been very positive, and their desire to lock up a future supply of nickel, a low-cost future supply of nickel, is very strong. So we don't feel like there's any shortage of groups that will look to get involved in the project, and that's really the next phase of work that we've got to do now that we've completed the feasibility. So when I look at the project, as I said, it's low capital intensity. We're sitting at about $370 million to build a 3.5 million tonne per annum nickel flotation circuit. Our operating costs are just under $3.60 a pound on an all-in sustaining basis. That's contained nickel. So those sort of, I guess, headline numbers really do give us a lot of confidence that this project will be built. If this project is not built, there really isn't going to be any projects that are going to get up in the nickel space. There's a few out there that are really high quality. Some of those of them are here, but Jaguar does sit comfortably with all of those projects. As I touched upon, the NPV of the project was, in US dollar terms, a bit over $600 million. As I said, just shy of $1 billion Australian dollars, which reflects very favourably against where our market cap sits today. It has got scale. As we are talking with partners on this project, scale is critically important to them. They need to know that they've got a long life mining operation that's going to supply nickel in all points in the cycle. And again, the cost profile that we have is very supportive of those conversations. So Brazil as a jurisdiction, it's got a number of advantages of being there. Principally, it's about the renewable power that is on the national grid. 80% of Brazil's power is currently coming from renewable sources, which does give us a very low footprint, but it also gives us very low operating costs. There's a favourable tax rate for where we are located, and so we're down at around 15%, and the royalties are, I guess, structured in such a way that the municipalities and the local regions where the project is located is strongly benefited by the development of projects. So you do get good community buy-in, and it's a credit to the system that we have here in Brazil. So if you just look at some of the examples around tax rate, power costs, those sort of things really do show that Jaguar is in a very strong position. And I think the power side of things probably is not well understood until you look at it on a bar chart like this. And Centaurus is an Australian listed company. I think as the nickel price came off at the start of the year, people looked at us as a company that would have Australian type costs associated with its nickel project, but that is clearly not the case. And when you look at just the power costs alone, sitting side by side with the average price of power on mining projects in Australia, they're poles apart. So those things play very directly into our operating cost scenario and why we believe that we'll be very strong and be in the market at all points in time in the cycle. So this region in Brazil is called the Carajás Mineral Province. It's located up in the northern part of the country. It's about 150 kilometres across by 100 north-south. In there you might have heard of mines S11D, largest iron ore deposit globally, is out of one deposit. Salobo, which is the biggest copper mine in Brazil, owned by Vale, approaching 35 million tonnes a year of throughput through that operation. Bottom left of that screen is where Aero Copper have just finished building the Boa Esperança copper flotation plant. That's a 4 million tonne per annum operation. They moved first dirt in September 2022. They've just commissioned and have produced the first concentrate from that project, and they've done that for about 320 or 330 million US dollars. So for us, that gives us extreme confidence that we are able to replicate pretty much what they're doing. We're about the same size operation. It's still a flotation circuit. It's in the same part of the world, only 40 kilometres from where we are located. So there's every reason that we can get on and essentially take a cookie cutter approach as to how they built that project for very good capital intensity and did it in such a timeline that it enabled them to get to market very quickly. We are in a part of the world where it's principally farmland, cattle grazing country, so there are really no impediments for what we're trying to do. There's two towns there. Tucumã is where we base ourselves. Another one there called Alanja do Norte, which is where Vale base themselves for their Onça Puma ferro-nickel operations. And so in addition to what Aero Copper have been doing in this region, Vale are also spending about $500 million putting in a second rotary kiln at their Onça Puma ferronickel operations about 15 kilometres from where Jaguar will be located. So there's a fair bit of activity going on here. Great part of the world to be developing an asset, very much an industrialised zone in Brazil, albeit sort of 800 kilometres from the coastline. Just some pictures there. That port is Vila do Conde port, where we'll be looking to export our products through. Bottom right there is the aero operations that I was there in late January, February, while it was still a construction site. That is obviously now an operating mine. And I guess top right there is just the size and scale of some of the hydro dams that exist in Brazil and why you do have such low power costs running through there. So one sort of simple slide I've tried to pull together just where the economics of this project currently sit. Again, I'll just harp back to where our market cap is, but we have a resource presently of just shy of 1 million tonnes of contained nickel metal. Of that, we've been able to convert about 460,000 tonnes into reserves, and that is just in open pits. There is, if you look bottom screen, there's another 225,000 tonnes that is sitting just below the pits that should come into an underground type development scenario at some point in time in the future. We've drilled holes down to 1,000 metres and hit mineralisation in some of the areas that we've got. We do think that the resource will continue to grow, but as it currently stands now, you're probably talking $16 billion of in-ground value. So it's a very significant deposit. It's an asset that will get built, and it does have all of those key economic indicators that allow you to get comfortable that the value versus price argument is clearly there to invest in Centaurus. So I guess just 4 key points that really hit home the message here is that, you know, we do have resource size, it does have scale. As an open pit deposit, it's still very good grades compared to most other open pittable nickel sulfide deposits. This resource will grow. We drilled 50,000 metres in 2023, which is not in the resource as yet. That was a function of us completing the feasibility study and needed to wait to release the upgrade to the resource until after we've got the feasibility study out. So we do have confidence that that resource is going to continue to grow. From a cost point of view, we can look at it whichever metric you like, whether it's dollar per tonne milled or dollar per pound of nickel in concentrate, but we are very low cost. So as I said, $3.57 per pound on an all-in sustaining basis, but on a C1 cash cost basis of about, I think it's about $2.30 per pound. So those numbers are going to be very important as we come to talk to potential off-takers and funders for the project. They want to know that we are going to be in the market at all points in the cycle, and that's one of their key criteria to investing here. And importantly for us, we are looking to fund this project on the equity side at least through project partnering. Given the mismatch between price v value, we do not want to blow up our capital structure. We are not going to go and raise a whole bunch of equity capital at a corporate level to build this project. It will come from a partner, and I can guarantee you that the market and the appetite for our nickel product is very strong, and the strategics still have a very close eye on what's happening in the nickel market. Just graphically looking at where we sit in the cost curve, so we are down in the lowest quartile of costs for all of the nickel market. Obviously Norilsk occupies half of that bottom quartile with its negative cash costs coming through from their PGE/nickel mines. But importantly for us, we sit below a lot of the Indonesian lateritic nickel supply, and that I think is going to pay dividends for us as we move forward. From a capital cost perspective, the capital intensity is sitting just under $20,000 per annual tonne of capacity. We have a reasonable amount of capital that's got to go into mining because we'd build the IWL, the integrated waste landform for our tailings disposal. The other thing that sort of goes into this capital cost is in the non-process infrastructure. There's about $37 million sitting in there for the 40 kilometres of power line for us to connect to the 230 kV national grid. So whilst we'll have put a little bit more capital in at the front end for that, it'll lead us to very low distribution charges, and hence why we will have very low power costs over the course of the project. And finally, I guess when you look at the intensity, again, it sits very comfortably down in the lowest quartile of undeveloped nickel projects across the globe. So there's nothing here that creates too much concern for us as far as how we go and partner, but that is the next phase of work. We're working with Standard Chartered Bank, and they will be a very big part of us pulling in the right partners to help build this project. The carbon footprint, I've touched upon it previously, at 7 tonnes of carbon per tonne of nickel equivalent. It is very low, again, sitting in the lowest quartile of where we want to be. The mine side of that is sitting at just over 1.5 tonnes of carbon per tonne of nickel, and I think that speaks to the fact that we will be getting all of our power from renewable sources for this project. When it comes to the equity side, the market is clearly looking for what's happening today as well as what's happening in the future. We've used a price of $19,800 for our forward price assumption. We are an 18-year project life looking to come on stream at the back end of 2027 and feel very comfortable with that price assessment based on where we understand supply and demand to be and what it's going to do over the next little while. But even when you run that through these economics through of $17,000 a tonne spot prices today, you still do deliver a very good set of economics, and that for us is quite important, and it's obviously the way that most equity investors will look at this. So we become a very strong leverage play to the nickel price. We know that nickel prices will probably go up over the next little while. There's a lot of reasons why that is the case. New Caledonia coming offline, Australia coming offline, and a number of the sulphide areas. Indonesia's costs are going up. So all of those things are going to factor into higher prices over the longer term, and we feel like we're very well leveraged to that sort of upside. Working with Standard Chartered now to run a more formal process. A lot of the groups that we've been speaking to over the last 12 months have really been waiting for the feasibility study numbers to be delivered. We've done that now. They can get their teeth stuck into that, and we'll be looking to have sort of a project partner coming into this by probably March next year. We'd like to have the lion's share of the work done over the next 6 months. We're planning on making an investment decision in April next year, and that will be on the back of getting the funding package sorted out, getting the last environmental licence piece in place, and also having the mining lease granted, and those things are all well on track with where we're heading right now. I did briefly touch upon the upside to the project. There's a number of value engineering phases of work that we've got going on. There's tweaks to the mine plan that we can make, but the underground does represent a real opportunity into the future. You can sort of see the Onça Preta pit is the small pit at the top of the screen, and then the Jaguar pits, it's about 3 kilometres of strike, but on that southern part, which we call Jaguar South, we've got further mineralisation sitting immediately below the pit. So those things in time will come in. I don't know whether they're going to be, I suspect they're not coming in the first 5 years of operations. I suspect they're probably not waiting until we've finished the open pit mineralisation. It's probably somewhere in between. But just to clarify, the numbers that we've put out in the feasibility study are just for open pittable mineralisation at this point in time. It doesn't factor in any of this upside. On the approval side of things, sometimes people get a little bit freaked out by that in Brazil, but I can tell you it is a very straightforward process. The environmental agencies give you clear terms of reference of what you need to do. There's a number of companies that have got through that approval process very comfortably. We've done that in the past with some of our other projects where we've been granted all of the licences we need. The environmental impact assessment has been approved. The preliminary licence, which came on the back of that approval, was received in January. Just happened to be that was when the real worst of the nickel market was happening, and probably got missed a little bit. But it is a key de-risking step for the project. And we're now in the second phase, which is, and you know, a more run-of-the-mill phase, which is to get the installation licence, and we should have that by the end of the year. If we get that by the end of the year, then the mining lease will get granted by the Mines Department probably in February or March next year, which ultimately leads us to the investment decision. So from a timeline point of view, get that investment decision, have a 2-year build. Again, comfortable that that is a pretty conservative assumption based on what Aero Copper have been able to achieve from go to woe. We are pretty much building a similar size and scale operation to what they've already done. So 2 years is more than enough, we think, to get that built, and then that would have us in production sort of the back end of 2027. So just to pull all that back together, the Jaguar project is central to what Centaurus is all about. We do want to build a strategic minerals business in Brazil. Starts with this asset, obviously got to get this one right, but you know, you will have 18,000 tonnes of nickel per year. It will sort of, that's at that scale, you're up around sort of the top 10 nickel sulfide producer. The costs are obviously very good. The carbon footprint is very good. And you have every confidence that this project will get built. So I come back to that original statement, look at the price, compare it to the value, based on all the facts and where your contrarian view might go, but Centaurus and the Jaguar project is a nickel project that will get built, and that value will come through. So thank you for your time. If you've got any questions, we're out here at booth 11.